Welcome back to the Bitcoin.com weekly update for July 9th, 2021. My name is Corbin Fraser, and on this week's show, yet another dog-themed coin brings in the crypto bulls. Robinhood's IPO filing shows retail crypto trading is on the rise, and 2020's biggest Bitcoin scam draws closer to a resolution. Yet another dog-themed meme coin has emerged, this time on the Binance Smart Chain. Baby Doge is a BEP20 token that popped up last month and saw a tremendous surge in value after Tesla's CEO Elon Musk gave a bizarre nod to the coin on Twitter last week in the form of a popular children's song. I believe it was Baby Shark. So while Musk was hyping dog coins to fans who lapped them up without much thought, it's not really anything new, but Baby Doge has managed to preserve a good chunk of its rise in value so far, even without further help from the space rockets and electric car sales guy. So the community coin, which claims to partner with a charity known as Pause for Cause, seems to have already have an enthusiastic core of supporters, joining other Dogecoin-inspired tokens like Shiba Inu. And then there's also Dogelon Mars. Baby Doge saw its value jump over 228% on July 1st, and between that time and Tuesday this week, the nascent crypto enjoyed a further 400% increase in value. What does this say for any of these meme coins' actual utility or future value? Who knows? The real important tie-in here is not Musk or altcoins. It's what phenomena like NFTs, spin-off coins like Baby Doge, and more, and the value being pumped into DeFi say about current economic zeitgeist. People are getting into crypto in a big way and becoming less thrilled with like legacy financial systems that don't allow individual freedom or any like creativity in money. So a few quick examples of that. Just this week, Spain finally approved a 2018 anti-fraud law, which puts a cap on the amount of cash that people can legally spend. So the law also forces citizens both inside and outside the country to disclose crypto holdings. In other words, if you want to hold crypto or pay for services in cash when the amount is greater than like 1,000 euros, which is like maybe around $1,200 US, you have to get permission from the government. So that's pretty cool if you hate yourself. So another example, in Africa, Nigerian banks are now concerned because, as the head of research at Regional Coronation Merchant Bank says, crypto platforms are attractive to millennials and other tech-literate customers because they require little or no physical banking presence. So the same representative noted the obvious benefit of cryptocurrency banking platforms is that they are cheaper than traditional banks. For many of us, that's why a lot of us got into this space. So when tech literacy and low-cost services are viewed as threats to the current financial system, it's no wonder that folks are excited about alternatives, whether they're reliable peer-to-peer electronic cash systems like Bitcoin Cash or dog-themed meme coins with supplies in the quadrillions. Demand for decentralized money, it just continues to grow, and businesses attempting to bridge that gap between like legacy and emerging financial markets have some hard numbers to prove it ultimately. So this leads us to new info released by popular trading platform Robinhood. This one's pretty cool news. I'm pretty pumped to see this data. The American financial services company recently released an IPO filing showing it saw 9.5 million customers trading $88 billion worth of crypto on the platform in the first quarter of 2021. So in a preliminary prospectus for its IPO filing July 1st with the U.S. Securities and Exchange Commission, Robinhood Markets Incorporated revealed some pretty interesting details about their crypto trading volumes, currently supporting 7 major cryptocurrencies, which include the likes of Bitcoin, Bitcoin Cash, Ethereum. The company detailed that in Q1 2021, 17% of its total revenue was derived from crypto transactions. That's up from just 4% in the previous quarter. Robinhood declared in the prospectus that it held approximately $12 billion in cryptocurrency assets under custody as of March 31st, 2021, which is a 23-fold increase from March 31st, 2020. So it's important to note, however, that trading on non-custodial platforms like Robinhood do carry some risk. You might remember back in January when a bunch of nerds on the internet, on Reddit, short-squeezed a bunch of Wall Street bigwigs on GameStop stock. So that was the GME stuff that we were talking about a while ago. Well, at the time, Robinhood basically cut off access to GameStop in a move that was widely seen as an attempt to save bigwigs from the so-called dumb money. So it's just to say that bridges like Robinhood between legacy finance and the new paradigm, they're not always going to be reliable. So with that in mind, you can always keep your crypto in a safe, non-custodial vault like the Bitcoin.com wallet, where you and only you have the keys, and where there's basically zero chance that you'll be locked out of your funds or miss a chance to trade. After all, you hold the private keys, you can always move it into another wallet, you can use them any way you see fit. So in our last story today, the dust surrounding a massive 2020 Ponzi scheme finally appeared to be settling. Mirror Trading International, the group Chainalysis called the biggest crypto scam of 2020, has been hit with a final liquidation order, and more Bitcoin has been recovered. 8,000 BTC tied to the scam, which originated out of South Africa, have been traced as a final liquidation order, which has been granted by the country's Cape High Court. This follows 1,280 Bitcoin surrendered by the former mirror trading broker FX Choice back in March. So there's been this ongoing battle since the scheme was outed in late 2020 between these liquidators, which are urgent to shut down the scam and declare it a Ponzi, and then these lingering representatives of mirror trading who wanted to postpone the whole proceedings. Most notable of these opponents is 50% shareholder Clinton Marks, who stuck around after CEO Johann Steinberg disappeared back in December of 2020, and has been claiming that it's still too early to liquidate the company. So Mirror Trading is thought to have had around 280,000 accounts when it was shut down back in December, but it's still kind of unclear exactly how many of those accounts were actually unique, and further, how many of them were even human. So reports note that investors' downlines could be extended to include even their pets, which is kind of a nice little throwback to the dogs again. So liquidators are set to return to the court September 8th to argue for Mirror Trading's official designation as a Ponzi scheme. So, well, folks, it can indeed be a dog-eat-dog world out there, so stay secure, keep your own crypto keys, and as always, don't forget to hit the like, subscribe, and bell notification buttons below. We'll notify you next time we've got a video. Go check out Bitcoin.com and grab the Bitcoin.com wallet app. Have a great week. Thanks, guys.